I'm Sinclair No. And today we have a special guest joining us. It's a pleasure to welcome back to these microphones an old friend of the Gormans and of Hard Money Watch, Roger Wiegand. Good morning, Roger.
Good morning, Sinclair. How are you?
Doing fine. I'll let you do the introductions because for those who have not yet heard you or this is their first time, what do you do?
My main business is I write Trader Tracks newsletter. My partner is Jay Taylor in New York City. We have been producing our investment and trading letter since the year 2004. We've got readers all over the world now. We do two things that are a little bit different. Number one, we recommend stocks, shares in precious metals companies, and also other commodities. We also recommend trades on futures, which is my personal background. I've been trading commodities since 1992. We've got two good brokers that help us, and we're very pleased to be involved in a lot of success in these markets. We're on the right trend for sure.
Now, the best way for folks to find out more, would that be the Trader Raj website?
Call Claudio Bassi at the miningstocks.com website in New York. That is 718-457-1426. I'll say it again, 718-457-1426 at miningstocks.com.
Okay, miningstocks.com. I would love to talk a little bit about mining stocks as we continue on, and we will open up the phones in just a little bit. I'd really like, though, to start out with the situation in Europe and get your feel for what's going on there, and because it looks as if this whole thing could fall apart at any moment.
Well, we were very concerned about this, Sinclair, over the weekend. We wrote some emails to our investors and traders and friends indicating that since Monday is a holiday in the U.S., it's President's Day, and the markets are closed, we think that that is the day that Europe is going to choose to make an announcement regarding what they intend to do with Greece. That way the American markets can't be roiled and pushed around. How far they go with that, I don't know. I think they're going to try to give us a positive spin, of course, on Monday. There's supposed to be an announcement on Tuesday morning as well. So we'll see where this thing goes. Obviously, there's been a lot of worry on this thing for a long time now. And what we're seeing is that we've got a situation that the Federal Reserve has had to step up and come in and offer credit to the European Central Bank by buying bonds. And by buying those bonds, they have backstopped a lot of the different parts of the problem. Now, one of the things many people are not understanding is this, and that is that New York has got a major investment. I'm saying the global banks have got a major investment in the banks and of Europe as a result of that and loans. If those loans are called or if they fail, and that's been an imminent danger, the entire capital of the big banks in New York could, in fact, be wiped out. That's a situation that many people are not aware of. So consequently, we're looking at a situation that's getting more dire by the day, but I still have full confidence, Sinclair, that they can kick the can a little more. They're going to go around in a circle of lending between Ben Bernanke's Federal Reserve, the European Central Bank, banks in Europe, the UN, IMF, and World Bank, all lending to each other, but it's merely a shuffling of paper, issuing credit, indicating that things are well, when in fact they are not well at all.
Yeah, I think you're right about the extend and pretend aspect of this. The central banks, the European Central Bank, the Federal Reserve, they'll act as if this thing's under control and until it actually does explode in their face and they can't stop it anymore.
No, I would agree with that, and there's been a lot of talk recently. In fact, I intercepted some emails from some people in both Europe and Asia indicating that the big global banks in New York were told to prepare for an imminent crack-up on the Greece having to exit the euro and the euro-land currency. And as a result of that, those preparations are underway, and they have been underway in Germany for some time. It's just prudent on their part to do that, because it's pretty obvious that Greece can't make the payments, the big interest payment that's coming due on the 20th. And not only that, they don't have any cash or credit to carry them forward. So everybody's been scrambling to try to cover up the problem. But in reality, the only thing they can do is extend it a little more before, in fact, it does unravel.
Can they put a fire ring around Greece, and beyond that, can they put one around Portugal and Spain and Italy?
I think they can do it temporarily by indicating that they've given Greece some credit. But that credit came through a back door from the United States and the Federal Reserve and through the European Central Bank. Now, it's in the charter of the European Central Bank that they are not permitted to make loans directly to member countries. However, the European Central Bank can buy and sell bonds, and by using the bond shuffle, they can do it for a while. But the bigger and larger problem would extend to the larger nations in Europe, which would be Italy and France, and Portugal and Greece are really not going to be bothered that much because of their size. They can deal with Portugal and Greece, but as it extends to some of the bigger ones, that's when they're going to get in serious trouble.
Now, you talk about the big New York banks being insolvent, really, or on the verge of that. How does something like that play out? Is this a repeat of 2008 and the Lehman Brothers, where we saw liquidity freeze up, and that kind of pushed us closer to insolvency?
That would be the problem that they're facing, but keep in mind, Mr. Bernanke has been busy since July 1st when QE2 did expire last year. He's in the midst of QE3, and they've used some other kinds of ideas where they're buying different kinds of instruments so that they can keep the banks moving. Now, the problem with the insolvency thing with the big banks in New York now is that those loans are at risk in Europe. Consequently, Europe was loaned $600 billion by the Federal Reserve through the avenue of Mr. Bernanke buying European central bonds. The bonds then, in turn, were moved over to some of the other loans in an effort to give them liquidity and keep them alive. So what I'm seeing here, Sinclair, is a major pyramid of paper, not only in the currencies, but more likely in the bond market. And we've been saying for several years now that when the bond market unravels, that's going to be the end of the movie. But how long can that go? Japan has proven that it's gone on since 1989. They are in the worst condition of all, indicating that they have debt to GDP ratio of 223%. The U.S. and a lot of the bigger Western nations in Europe are hovering around 80 to 85% on their debt to GDP ratio. Normally, history has shown that once the GDP ratio passes 70%, that there's no return. We are now in a position where there's 5 or 6 big nations, including the U.S. at 83%, that exceed that 70% marker line. So consequently, based on history, we have passed the point of no return. Now, Japan is a little bit of a different situation in that they buy a lot of their own paper internally. They do sell it externally, too, but the Japanese people are very frugal and they're savers. And they save through their postal savings network, and that network is a buyer of the JBG, the Japanese bonds, and that's the reason they've been able to keep the whole game afloat, despite the fact that the GDP to debt ratio in Japan is 223%, which is absolutely amazing.
Yeah, but we are not savers like the Japanese, not in this country. So who buys U.S. debt at a certain point?
Well, at a certain point, the big buyers of U.S. debt, those being some domestic people like the big PIMCO bond fund, they got scared and they backed out, but they came back in because it appeared the bond market was going to remain solvent. But the other big buyers have been China and also Japan. And Japan and China, interestingly, have been making noise recently like they want to help Europe. They don't want to see this thing unravel either. So, in fact, they may be buyers of European central bonds as well. Now, what's happening here is everybody is buying everybody's paper, and it's just going around in a circle. And one has to wonder, when does this come to an end? Who's going to lose their nerve and decide to unload some of this paper and cause the whole pyramid to come crashing down? Now, China has so much paper right now, a U.S. paper that they purchased. One of the ways they've been getting rid of it is to trade treasury bonds and treasury bills for hard assets, that being oil and gas properties, gold mines, silver mines. They're looking now, I learned this week, that they want to buy and open and operate a major iron ore mine in Africa, simply because the prices coming out of Australia have gotten to be so high. Australia, their major customer is China, and they are selling a lot of iron ore and other base metals to China, but China is trying to go around that situation by opening their own iron mine in Africa. Additionally, Sinclair, what's going on is that there's a big copper deposit in Mongolia, and not long ago, I'm thinking roughly 2-3 years ago, China made the decision to build 6 giant copper smelters right on the border between China and Mongolia. They're on the China side of the border. They cost $600 billion per smelter. There are 6 of them, and they're going to run a rail line from Mongolia to haul copper directly to those smelters. So China is busy buying hard assets because they understand very clearly what's going on with hard assets versus fiat paper money. It's very interesting.
Sounds as if we're setting up for a big short on treasuries at some point, and I want to talk with you about the possibility of that. We'll also open up the phones, 602-324-1510, if you have a question for Roger Wiegand. Trader Raj is with us today, and we always have some great conversations with Roger. And if you'd like to join in that conversation, 602-324-1510.
This is Hard Money Watch with Pat Gorman on Money Radio 1510.